Welcome to Investors Insight, where today's topic is surprising September. Last week, there was a lot of strength in the market, which is great to see, considering we have to contend with a seasonally weak month of September. And the test this week will be if the market can continue the uptrend, or was last week a bounce only because the previous 3 weeks were down. Something we're watching carefully here. And the good news is a seasonally strong fourth quarter is right around the corner. So if history is a guide, midterm elections may provide an added late year boost. And as you can see in this chart, September has been one of the weakest months for stocks historically. But look at the green bars for October and November. The calendar is historically bullish in fourth quarter during midterm election years. And we're watching carefully to see if market strength seen last week will continue leading into the fourth quarter. A lot of this depends on what the Fed decides to do, and a lot of it depends on inflation. So Trey, give us an update on inflation.
Yeah, absolutely, Bobby. So the Fed, as we've been talking about for the last few years, is what is most important in these markets. And the Federal Reserve is absolutely watching inflation. I think everybody is keen on inflation. We get this month's inflation report, CPI, coming out Tuesday. The Federal Reserve will meet next week. So this is the last large data point that they'll have to analyze. Expectations are for CPI year-over-year change to be 8%. While that's not comfortable, that is down from 8.5% and down again from 9.1%. So that would be 3 straight months of decline from the peak. So the first thing we got to do is change the rate of change, and we're seeing that, which is a very good positive indicator. And why is that very important? I want to show this slide from our research partners at Strategas. You can see here that the federal funds rate, that's the rate that the Fed puts out on money, typically peaks, at least in every cycle since 1974, at a higher rate than CPI. So currently the Fed funds rate is at 2.5%, inflation at 8.5%. So that shows the Federal Reserve has a lot of work to do on raising rates. Now, it can come in 2 ways. They can cross either the Fed funds rate raising or hopefully by inflation falling. And so we really need to see them meet in the middle, hopefully closer to where we are today. So the first step is inflation falling. If the Federal Reserve has to do all the work like they did back in the 80s, you could see an interest rates well above 8%. That would be very drastic and negative for the economy. So we're hopeful that inflation does its part by coming down starting tomorrow.
Yeah, we'll find out tomorrow, Tuesday, leading up to the Fed meeting next Tuesday, Wednesday. So important number coming out this week on inflation. And then Ty, all the news is talking about inflation number, focus on inflation. And what the news didn't cover really is the great jobs report we got. Talk about that.
The jobs report was a sound jobs report. It had a little bit of everything. So we added more jobs, which was good, more than expected. The unemployment rate rose from 3.5% to 3.7%. So I know, that seems like a bad thing that happened. However, our labor force participation rate, the amount of people actually actively looking for jobs, rose for the first time in what seems forever. This is really good news. This is exactly what the Fed wants to see: more people looking for jobs. Average hourly earnings for the month outpaced inflation. So that's another good thing to see. And we're adding to the service sector, which is also deflationary. So a lot of good stuff in this report, despite the higher than expected unemployment number. But overall, a pretty sound report for the Fed.
And Adam, we talked about earlier that last week in the market, there was a lot of strength in what's usually a rough September. Talk about that. Give us an update after the strength we saw. Where are technicals right now?
I appreciate it, Bobby. Yeah, and 2 weeks ago, we saw a lot of volatility in the markets. Last week, we had an up week with all 11 sectors finishing up on Friday's close, coming in at 4,067. That gives us a new short-term resistance level of 4,100, the new short-term support level of 4,030. 2 key numbers I want you to really focus on are the intermediate resistance and support levels that kind of reach out to the end of the year as we approach midterm elections. And on the upside, the resistance level we're looking for is 4,200. The support level we're looking at is 3,900. So what that means is not only breaking through that 4,200 range, but keeping above that, we could see some positive momentum moving forward if that potentially happens.
Yeah. So this week, very important inflation number. Watching that carefully, seeing if the market can break through that important 4,200 on the S&P number. So a lot going on. As always, if you have questions about what we've talked about today, or questions in general, please reach out to us. We'd love to talk to you. Have a great week. Thanks.